Let me just get your thoughts on some of those results that came out last week. The first one, Dangote Flour, a bit disappointing. Obviously, the result was delayed and that technical suspension was on the share price for a while. Yeah. Share price went down, one can say as anticipated. What are your thoughts?
Well, basically, Dangote Flour's result was a bit disappointing, or well, significantly disappointing. We saw top line growth like 10% to about 61 billion, while the bottom line dipped about 51%, coming out at 2.7 billion naira. Well, what news making the rounds is hinging the performance basically on higher wheat prices in the second half of the year. Well, that is true because we see that prices of the raw material went up about 94% in the second half of 2010. But looking at the numbers closely, what we observed was a stability in gross profit margin at about 21% year on year. But going down to the bottom line, we saw a huge tax impact on Dangote Flour's profits of about 2.1 billion for last year, as against about a tax credit of 178 million in 2009, which basically accounted for most of the hits that was taken by the company in 2010. So operationally, yes, there was strain in terms of higher wheat prices and stuff like that, but we think it's much more about a financial issue with Dangote with respect to its tax regime, current tax regime the company is facing at the moment.
Right, but how strong a buy is that stock? Like I mentioned, it went down 5% last week. What are your expectations? This is a stock that really outperformed the market last year. Obviously, it's been under pressure since the results were released. What are your expectations going forward?
We think the stock is still likely to suffer. The bottom line is investors, well, they appreciate what goes or what's behind the numbers. By the end of the day, they want returns. And year on year, the ROE is down about 10%. It was 10% in 2009. And in 2010, with the recently released results, the ROE is down to about 10% right now. So it was 20% in 2009 and 10% right now. And I mean, if you get an ROE of 10% as against cost of equity, which is obviously higher than that, then it's definitely a no-buy for investors. So we expect that the shares will still suffer for some time to come.
Let's move on to GT Bank. Obviously, that was more positive note. We saw PBT up almost 40%, 25 billion. What are your thoughts on those numbers? Obviously, stock price rallied after coming down with the broader market most of last week, but over the last two sessions, it's been upbeat. What are your expectations going forward, and what are your thoughts on the results?
Well, for GT Bank, for the half year 2010, the results were impressive, yes. But if we look at it on a quarterly basis, well, it wasn't as exciting as the half year result, as we saw a decline in top line about 3%, and also bottom line dipped significantly about 34%. Yeah, but since the company's interim corporate benefit is based on half-year results, they've come out to declare a dividend of 25, an interim dividend of 25 kobo. Focus will be much more on the half-year results, which came in quite strongly. I mean, even if we strip out the extraordinary income from the divestment from Interswitch of about 2.5 billion naira, we still have fairly decent margins for GT Bank for the half year 2011. ROE is also up about 200 basis points, 23%, which is quite fantastic. And the key thing here for GT basically is that, bearing in mind that there was a 1-for-4 bonus issue for last full year, that's 2010 full year, raising the company's total number of shares outstanding to about 29 billion shares in issue. For the half year, what we saw basically was much more of a stability as a base case in the company's EPS, half year EPS at about 78 kobo per share, same as what we had last year, 2010 half year. But if we take into consideration the 2.5 billion from the sale of its stake in Interswitch, that takes us to about 87 kobo per share for the EPS half year as we speak right now, which is very good. And I think a market would price that into the stock. And based on that, we should see a much more positive sentiment towards GT Bank.
And let's look at the broader market. Obviously, you're expecting positive sentiment for GT Bank. But what about the broader market? And obviously, like I mentioned, we saw the market slide most of last week. Indeed, it was about a 7-day decline until we saw a pickup in Thursday and Friday. We have obviously the global factors at play. We have the recent intervention in the banks putting pressure on the market. Going forward this week, how positive do you think it's going to be?
Yeah, I think, well, like you rightly observed, pressures coming from the global scene, as well as from the domestic scene, the nationalized banks. And I think it was much more, what the route we saw in the last 7 days probably was a knee-jerk reaction as well, because, I mean, the way the news hit the market about the nationalization of the banks, if you take a look at the index, the banks suffered the most over this period. But I think right now we have more clarity as regards the whole process, what actually happened. So there's less of speculations, less of anxiety, and I think we should expect calmer markets going forward. Also, I think on the back of this, we should see speculators trying to take advantage of probably investors, long-term investors taking positions right now. They want to ride the price as well, maybe do 5–10%, and of course cash out at the end of the rally. But I think for the next 1, 2, 3 days, probably early part of this week up until Thursday, we should see a continuation of the rally we saw towards the end of last week. And of course, speculators, I think, would come in again to well, take profits when we get to some new highs as well.
Over the weekend, the presidency did mention that the new finance minister should be starting work this week. Obviously, there's a lot of expectations about somebody from the World Bank coming in to be the head of the economic team and, of course, be the finance minister. What are your expectations on the bearing that would have on the market?
I think it bodes well for the market, especially from looking at it from the foreign investor perspective, because, I mean, right now, or historically, Nigerian market has been mostly traded by foreign investors, and we are looking to see much more foreign inflows into the market to help, you know, well, dip in the market and also help sustain prices. But I think for our coming in, it gives a sense of comfort for those already invested in Nigeria, not just investing in securities, be it bond market or equities market, but investing in those invested in the real economy. I think it bodes well. They get a sense of comfort. And for those who are not currently invested in Nigeria, they begin to reassess the Nigerian economic story. By and large, in the long term, it should kind of increase the value proposition for Nigeria as an investment destination, which should help well, channel foreign direct investment into Nigeria, like I said, in terms of portfolio investment as well as investment in the real economy.
But what do you think should be our priorities? There's been a lot of talk about fiscal consolidation, and she's also spoken about that before coming on board. What are your expectations on what she should be focusing on and how the markets will react to that?
Well, in the very immediate term, I think a key focus should be looking at what's happening globally. I mean, there's a significant risk that we might see a reversal or a slowdown, relapse in the current global economic recovery. And of course, this has implications for the Nigerian economy. I think our immediate focus should be on that in terms of maybe thinking proactively, putting up measures to guard against us being, that's Nigeria now, being severely impacted by if this situation pans out. But in the longer term, like she's mentioned in several media, I think focus also should be on trying to achieve some form of coordination between fiscal and monetary policy. Up until now, what we've seen is kind of disconnect between the two. And, well, she coming in with a wealth of experience, I think it's going to be top priority for her. And also in terms of, well, management of the budget, there's a lot of talk that, well, most of Nigeria's budget is focused on is financing recurrent expenditure. At the last count, 74% of the budget was skewed towards recurrent expenditure. I think this should also be a point of concern for us if we're to be serious about, well, achieving our long-term developmental aspirations as a country. Of course, most of our budget should, well, be channeled towards investments that are capable of generating future cash flows. Yeah.